If I told you that the first $1 million you will ever make has very little to do with money, then you might hesitate for a moment, and you might even doubt that statement, because everything you see around you seems to suggest the opposite. And yet, after decades of observing markets, businesses, and human behavior, I can tell you that the number itself is never the real challenge, but rather the person you must become in order to reach that number is where the true difficulty lies. Most people believe that wealth is created through opportunity, and they spend their time searching for the perfect moment, the perfect idea, or the perfect strategy. And while those things can matter, they are not what determines long-term success, because opportunity without discipline is wasted, and strategy without patience collapses, and timing without emotional control leads to mistakes that erase progress. What truly determines whether you will reach your first million is not what happens around you, but how you respond to it. Because every decision you make is influenced by your mindset, and your mindset is shaped by your habits, your environment, and your ability to remain rational when others are not. In 2026, this becomes even more important because the world you are living in is faster, louder, and more distracting than ever before. And while it offers more opportunities than any previous generation has ever had, it also creates more pressure, more confusion, and more temptation to act without thinking. And that combination is what keeps most people from building real wealth. You are constantly exposed to success stories, and you see people making money in ways that seem effortless. And as a result, you begin to feel that you are behind. And that feeling pushes you to act quickly. And when you act quickly, you stop thinking clearly. And when you stop thinking clearly, you begin to make decisions that are based on emotion rather than logic. This is where most people fail, not because they lack intelligence, but because they lack control. And control is not something you develop overnight, but rather something you build over time through repeated choices, through discipline, and through your willingness to stay consistent even when nothing seems to be happening. The first million is not simply a financial milestone, but a psychological transformation, and it acts as a filter that separates those who can manage themselves from those who cannot, because along the way, you will be tested repeatedly, and those tests will not be obvious, but they will appear in the form of temptation, impatience, comparison, and doubt. You will see others moving faster than you, and you will question your own progress, and you will feel the urge to change direction. And in those moments, your decision will determine whether you move forward or start over. Because every time you abandon a sound approach in search of something faster, you reset your progress. Wealth is not built through intensity, but through consistency. And consistency requires you to do things that feel unremarkable. And often it requires you to continue doing those things without any visible reward. And that is where most people give up, because they expect results to appear quickly. And when they do not, they assume that something is wrong. But nothing is wrong, because the early stages of building wealth are invisible. And during this phase, you are not seeing financial results yet, but you are building the foundation that will eventually produce them. And that foundation is made up of habits, discipline, and the ability to think long term. One of the most important pieces of advice I can give you is to slow down your decisions while maintaining your ambition, because ambition without control leads to mistakes, and mistakes, especially large ones, can set you back significantly. And in some cases, they can erase years of progress in a single moment. You must understand that avoiding mistakes is more important than chasing success, because success compounds slowly, while mistakes compound quickly. And if you can avoid major losses, you give yourself the opportunity to benefit from time. And time is the most powerful force in wealth creation. Time takes small, consistent actions and turns them into significant outcomes. But it only works if you allow it to. And that means you must stay on a path long enough for the results to appear. And most people do not do this, because they become impatient, and they change direction before time has a chance to work. Let me give you an example. And this is something you will see often if you pay attention, because there are individuals who begin investing with small amounts, and they do so consistently, and they do not chase trends, and they do not react emotionally to short-term changes, and for a long period of time. Their progress appears minimal, and it seems as though nothing is happening. However, after several years, something changes, and their investments begin to grow at a faster rate. And this is not because they changed their strategy, but because time has amplified their consistency, and what once seemed slow now becomes powerful. Now compare that to someone who is constantly searching for faster results because they move from one opportunity to another, and they follow trends, and they react to market movements, and sometimes they experience quick gains. And those gains create confidence, but that confidence is often misplaced because it is not built on discipline, but on temporary success. Eventually, they make a mistake, and because they are not grounded in a consistent approach, that mistake becomes significant, and they lose a large portion of what they have built. And in many cases, they return to where they started, or even worse. And the difference between these two individuals is not intelligence, but behavior. Another example can be seen in how people manage their income, because there are individuals who earn a reasonable amount of money, but they spend all of it, and they justify their spending by telling themselves that they deserve it. And over time, their lifestyle expands to match their income, and they feel successful, but they are not building anything. On the other hand, there are individuals who earn a similar amount, but they choose to live slightly below their means, and they save a portion of their income, and they invest it consistently, and they do not feel the need to display their success. And over time, they accumulate assets, and those assets begin to generate returns, and eventually their financial position becomes significantly stronger. The difference is not income, but behavior, and behavior is driven by mindset. Another important piece of advice is to learn how to be comfortable being misunderstood, because when you are building wealth in a disciplined and consistent way, it will not look impressive to others. And in fact, it may even look like you are not making progress. And people may question your choices, and they may not understand why you are not chasing quick opportunities. But you must remember that you are not building for approval, and you are not building for recognition, but rather you are building for independence. And independence requires you to think differently from the majority. You must also focus on protecting your downside, because while it is tempting to focus on potential gains, it is far more important to consider potential losses. And if you can avoid large losses, you preserve your ability to continue, and continuing is what allows you to succeed. Let me extend this further with another practical example, because imagine someone who starts a small online business, and at the beginning, they receive very few customers, and their revenue is low, and their progress feels slow, and they begin to doubt whether their effort is worth it, and they consider quitting. However, instead of stopping, they focus on improving their product, and they learn from feedback, and they refine their approach, and they continue working consistently. And over time, their quality improves, and their reputation grows, and slowly, more customers begin to appear. Now imagine another person who starts a similar business, but when they do not see immediate results, they abandon it and move to another idea, and then another, and they repeat this cycle, and years pass, and they are still searching for something that works. The difference is not talent, but persistence. Another important lesson is to control your expectations, because unrealistic expectations create frustration, and frustration leads to poor decisions, and poor decisions lead to setbacks, and that cycle repeats. If you expect slow progress, you will not be discouraged by it. If you expect challenges, you will not be surprised by them. And if you expect discomfort, you will be prepared to handle it. Let me give you another piece of advice that is often overlooked, which is to build a margin of safety in everything you do. Because whether it is investing, business, or personal finance, having a buffer protects you from unexpected outcomes, and that protection allows you to continue even when things do not go as planned. For example, if you spend everything you earn, then any unexpected expense becomes a problem. But if you save consistently, then you create flexibility, and that flexibility reduces stress and improves decision making. Another example can be seen in investing, because if you invest with no margin of safety, then small mistakes can lead to significant losses. But if you invest carefully, with consideration for risk, then you reduce the likelihood of major setbacks. Another critical piece of advice is to develop emotional awareness, because many people believe they are making rational decisions when they are actually reacting emotionally. And if you cannot recognize your emotions, you cannot control them. When you feel excitement, you must question it. When you feel fear, you must examine it, because those emotions often signal that your judgment may be compromised. Another example can be seen during market volatility, because when prices rise rapidly, people feel confident and take on more risk. And when prices fall, they feel afraid and withdraw. And this pattern leads to buying high and selling low, which is the opposite of what creates wealth. The journey to your first million requires you to act differently, to remain calm when others are emotional, to remain patient when others are rushing, to remain disciplined when others are distracted. Another overlooked factor is energy, because building wealth is not just about time, but also about how you use your time. And if you are constantly exhausted, distracted, or unfocused, then your decisions will suffer. And poor decisions lead to poor outcomes. That is why you must take care of your physical and mental state, because clarity requires energy. And without energy, even the best strategies fail. As you continue on this path, you will begin to notice that progress is not linear, because there will be periods of rapid improvement, followed by periods of stagnation. And those periods can be discouraging if you do not understand them. But stagnation is often a sign of consolidation, and consolidation is necessary for growth, because it allows your foundation to strengthen before the next phase of progress begins. If you can remain consistent during these phases, then you position yourself for long-term success. At some point, you will look back and realize that the most important changes did not happen in your bank account, but in your thinking, because you will have developed patience, discipline, and clarity, and those qualities will guide your decisions. And once you have those, the process becomes easier, not because the challenges disappear, but because you are better equipped to handle them. That is the real secret behind your first million in 2026. And it is not something that can be rushed, and it is not something that can be skipped, but it is something that can be built step by step, decision by decision, day by day. And if you are willing to stay on that path, even when it feels slow, even when it feels uncertain, even when it feels difficult, then over time your outcome becomes inevitable. Not because of luck, not because of timing, but because of who you chose to become. And as you continue on this path, there is something even deeper that begins to develop within you. And that is not just discipline or patience, but clarity, because over time, you start to see patterns that most people completely miss. And those patterns are not obvious in the beginning, but once you recognize them, they begin to guide your decisions in a way that feels almost natural. You begin to understand that most people are reacting to the same triggers, and because of that, their behavior becomes predictable. And when behavior is predictable, outcomes are predictable as well. And this is where your advantage starts to grow. Because instead of reacting with the crowd, you begin to step back and observe. You notice that when something becomes popular, it is often already late. You notice that when fear is at its highest, opportunity is often present. And you begin to understand that your role is not to follow the majority, but to think independently and act based on logic rather than emotion. This shift does not happen quickly, and it cannot be forced, because it comes from experience, and experience comes from time, and time comes from staying in the game long enough to learn. Another important piece of advice is to separate noise from signal, because in 2026 you are surrounded by an overwhelming amount of information, and not all of it is useful. And in fact, most of it is designed to capture your attention rather than improve your decisions. If you consume everything, you will understand nothing. If you follow every opinion, you will lose your own. That is why you must be selective, and you must learn to ignore what does not matter, because focus is not just about what you do, but also about what you choose not to do. Let me give you an example, because there are people who spend hours every day consuming financial content, watching updates, analyzing short-term movements, and constantly changing their perspective. And while they feel informed, they are often confused because they are overwhelmed by conflicting information. Now compare that to someone who limits their input, who focuses on a few reliable sources, who studies fundamentals, and who spends more time thinking than reacting. And over time, their understanding becomes deeper, and their decisions become clearer. The difference is not access to information. It is how that information is used. Another critical lesson is learning how to handle success. It's not a bull, because while failure tests your resilience, success tests your discipline. And many people fail not when they lose, but when they win, because early success can create overconfidence. And overconfidence leads to risk-taking without proper evaluation. You may experience a period where things go well, and your decisions seem to work, and your results improve. and it becomes tempting to believe that you have mastered the process. And that belief is dangerous because it reduces your caution. Let me give you a real-world pattern, because there are individuals who enter a favorable environment and they experience quick gains, and those gains reinforce their confidence, and they begin to increase their risk, and they move faster, and they become less disciplined. Then the environment changes, and suddenly their strategy no longer works. And because they are overexposed, the losses are significant, and in many cases, they lose more than they gained. This is why humility is important, not because it sounds good, but because it protects you. It reminds you that you do not control outcomes, and that even good decisions can produce bad results in the short term, and that awareness keeps you grounded. Another piece of advice is to think in probabilities rather than certainties, because many people make decisions as if outcomes are guaranteed. And when those outcomes do not occur, they are surprised, and that surprise leads to emotional reactions. But if you think in probabilities, you understand that every decision carries risk, and that outcomes can vary, and that your goal is not to be right every time, but to make decisions that are favorable over the long term. Let me give you an example, because imagine two individuals making investments, and one expects every investment to succeed, and when one fails, they become discouraged, and they change their strategy, and they lose confidence. The other understands that not every decision will work, but that if they follow a sound process, the overall results will be positive, and because of that, they remain consistent, and over time, their results improve. The difference is not knowledge, it is expectation. Another important factor is your relationship with time, because most people treat time as something to be spent rather than something to be invested. And that mindset leads to short-term thinking, because if you are always focused on immediate results, you will make decisions that prioritize the present over the future. But if you treat time as an asset, then you begin to think differently, because you understand that every action you take today has a future consequence, and that understanding shapes your behavior. Let me give you another example, because there are individuals who spend their free time consuming entertainment, and while there is nothing wrong with that in moderation, when it becomes excessive, it limits their growth, and over time, that lost time accumulates. Now compare that to someone who dedicates a portion of their time to learning, to building skills, to improving themselves, and while the difference may not be visible immediately, over years, it becomes significant. That is how time works. It amplifies your choices. Another overlooked lesson is learning when to do nothing, because in a world that encourages constant action, doing nothing can feel uncomfortable, and yet in many situations, doing nothing is the best decision, especially in investing, because reacting to every movement often leads to mistakes, and patience allows you to avoid unnecessary actions. You must understand that activity does not equal progress, and sometimes the best move is to wait, to observe, and to allow situations to develop. Another practical example can be seen in business decisions, because there are times when expanding too quickly can create problems. And while growth may seem positive, if it is not supported by a strong foundation, it can lead to instability. Those who understand this take their time. They build carefully. They ensure that each step is solid before moving forward. And as a result, their growth is sustainable. Another important piece of advice is to align your actions with your long-term vision, because if your daily behavior does not support your long-term goals, then your progress will be inconsistent, and inconsistency leads to frustration. You must constantly ask yourself whether your actions today are moving you closer to where you want to be, or further away, and that awareness helps you stay on track. Let me give you one more example, because there are individuals who say they want financial freedom, but their actions reflect the opposite, because they spend impulsively, avoid learning, and delay investing, and over time, their situation does not improve. Now compare that to someone who aligns their behavior with their goals, because they save consistently, invest regularly, and continue learning. And while their progress may be slow at first, it is steady, and steady progress leads to meaningful outcomes. The journey to your first million is not about perfection, and you will make mistakes, and you will experience setbacks, and there will be moments where you question your path. But what matters is not whether you avoid mistakes entirely, but whether you learn from them and continue. Because every mistake, if understood correctly, becomes a lesson, and every lesson improves your decision making, and better decisions lead to better outcomes. And over time, those improvements compound. That is the process. Sometimes frustrating, often invisible, but incredibly powerful. And if you stay committed to that process, if you continue to think clearly, act consistently, and remain patient, then eventually your results will reflect your effort. Not immediately, but inevitably. And when that happens, when you finally reach that milestone, you will realize that the number itself was never the most important part, because what truly matters is that you have become someone who understands how to build, how to protect, and how to grow. And once you have that understanding, you are no longer chasing wealth. You are capable of creating it. And that is the real transformation. That is the real advantage. And that is the true secret behind your first million in 2026.